Why is the opening time frame important? So the opening time frame, what we want to look at. So if you look at a 30-minute candle, every time frame, no matter what time frame you're looking at, is basically the same, right? You get an opening price, a low price, high price, a close price. So the opening price and the close price, right? That's locked in. We know that, okay, the first piece of information that we're going to have in a new candle, we don't know what the high is going to be, and we don't know what the low is going to be, and we don't know what the close is going to be. Like, we don't know that, right? The only way you know that is after the candle closes. But what we do know at the start of every candle is the opening price. So that opening price kind of like is a line in the sand. So when we start seeing opening prints, right? So if price opens up, like right now, where's the 1030 open? 1030 opens at 29,761. Quick 101 lesson here. 10 o'clock opens. First thing it does, it opens, it goes down, goes up, goes down, and then eventually what happens? Notice how after it gets above the open right here, we then get back below the open right here. Okay, that's step one, we get above. Step two, we get back below. It doesn't mean anything yet. It doesn't mean anything yet until price picks a direction. So technically we're still two-way. It's still two-directional. It can go up, it's going down, it's going up. And then we can see they try again right here. And then they try again right here. And they try again right here. And they try again right here. And then so what this is telling us is so far that this high for 10 o'clock was the high of that in that moment, at this exact moment at 10:08, this was the high of the 10 o'clock candle, and this was the low of the 10 o'clock candle. So when you see that they are unable to get back above the opening price, if you're using market structure, then market structure is telling us that we're bearish, right? So what I like to do is use my Enzo bands for kind of like trend, and that's where we would be entering our trades, right? So against the open plus the Enzo band, and then it finally picks a direction, boom, all the way down. You get the rejection there. Then towards the end of the candles at 10:15, they come back and reclaim. And once they reclaim, now we get bullish on the 30-minute. So once this happens, now we went from bearish for that 30 minutes to now bullish, and then they ended up closing up. Okay. So once this would happen here, you would obviously want to be out of the trade. So for us, how we would do this is we'd be playing the shorts off the upper band, taking profits at the bottom band or a key level. Once we start getting extreme like this, and then with our tool, what we like to do is use, where is my B rotations? We start using market structure to identify the shift of trend. So in this instance, like how would you enter from over here? Well, you would enter technically on the break here. You get a break here, and then you wait for the pullback, and then the red dots is how we enter our trades. And then here we get the lower low, lower high, higher low, lower high, higher low, and then we break right here. Boom. So we call that a W pattern. See the W? It's like a double bottom. Once we break, that's when you're either cutting your trade or you're getting long in anticipation of a move back towards the upper band. And from here, of course, if you have a reason to believe you're going to go higher like I did, then you can hold for the bigger target like I did. So now same scenario happened over here. Look at 10:30. We open up, and as soon as we open up, we get back below right away. They did try to reclaim 10:30 open. They couldn't do it there. And then these guys consolidated a bit, and then they tried again right here at 10:38, couldn't do it. Right? And then, you know, if you know basic technical analysis, what do we got here? It's like a downtrend, right? We got like a little bare channel that we're in right now. So trying to short this thing, you're basically, trying to buy this thing, you're buying in a downtrend, technically. So the 10:30 auction is currently in a downtrend. It's currently bearish, right? And we know that the market moves in three directions. It's either going to go up in an uptrend, it's going to go down in a downtrend, or it's going to go sideways and there's no trend. That's what it was at 9:30, right? So at 9:30 right here, there was no trend. This was the 9:30 auction right here. So yeah, I was able to catch the initial long, but we ended up failing. Where did we end up projecting? If you look left, we ended up projecting right around the 9 o'clock open print. So that was our prior 30-minute open right here, right? So we couldn't get through that level. Okay, so in this instance, this was the auction for 9:30. We started up higher, created a higher low, we expanded up, and then we retraced back down. Then we found support again, created a large W, we broke out, and then failed again. This is where I was getting chopped up because I was trying to catch these bigger moves and not taking the profits, right? I was not taking the profits. I was anticipating, since we were unable to stay under 9:30, that maybe there would be enough juice to get back to high day. And that did not happen. And then finally, they ended up cracking 9:30 right here. And then 10 o'clock opens up. And then you notice how we end up basing below and then displaced lower. So right now, our current auction on the 10:30 candle is still printing bearish market structure. So this current 30-minute candle, if you throw it on your chart, let's look at what it looks like. Okay, we can just get rid of all the indicators right now. Even if you don't have any indicators, looking at the basic structure, this is our 30-minute candle right now. So this big red candle, right, is the same thing as what you're seeing here. The only difference is we're looking at the internal market structure, like a smaller micro structure of price action. So if you go down to like a 1-minute chart, it would look similar, or a 15-second chart, it would look similar. So this price action is what's building this red candle right now, okay? And this big green candle with this big wick down here, that was this move right down here. So we ended up, so opened up here, we ended up opening up, we traded lower, that's what the wick is with the candle, and then we expanded higher and closed up. But now we're beginning to retrace back down again. And we're testing the prior opening print from 10 o'clock. If we start holding below the 10 o'clock open print, then this becomes a possible failure area here, but it's also an opportunity where you could look for scalps, right? So I don't just trade off these levels by themselves. I use other things too. Obviously the VWAP, we want to look at gamma levels, and I like to use my quarter levels and all that good stuff. But all we're trying to do is pinpoint when that 30-minute candle is going to expand. And, you know, to be honest with you, if all you had on your chart was a 30-minute chart and a Renko chart, that's all you need. Like, you could just focus on that, right? And then you can use all the extra context layers to kind of give you more of just add more confluence to your decision-making process. It's not that easy, obviously. You know, like today was not that easy for me. I was getting cut up left and right, but then I guess I ended up having the right idea about them wanting to eventually take out the NFP low. And I should have just waited for that, but that's not my style either. I like to be in the trade towards the low, or be, you know, I'm a scalper. So I'm going to be taking these moves, the volatility. I'm going to be taking these rotations. Not all of them, but I do what I can. I do what I can. Some days are better than others. Let's get rid of that. And then how do you know price is going to reject or fail a level? How do you actually know that, right? That's the next question, right? How can you know if a level is going to hold or fail? Well, that's going to be where you can actually, so there's like 2 layers, or I should say 3 layers of what's happening that we want to pay attention to. So look at what just happened, by the way. This was our 10 o'clock open. They tested the level here once. They tested it twice. We rejected it. We reclaimed it, right? So that's what we want to see. That would have been a good scalp long, right? But we're still heavy under 761s. So what time is it? 10:47. So if the buyers want to take control of this candle, if this 30-minute candle is going to flip green, right, that means that this candle needs to move from where it currently is back through the high, which is 200 ticks from where it is, right? And it can do that in 15 minutes. How do we know that? Well, we know that the 15-minute ATR, the ATR for a 30-minute candle is 300 ticks. So 15 minutes would be probably half of that, right? So 150 ticks. So it can still do that in the next 15 minutes. There's time, 15 minutes left on this candle, and the ATR supports it. So there's a possibility this candle flips green. Doesn't mean I'm going to take the trade, but it just, you know, if we put the pieces together like that, we can anticipate that, yeah, if these buyers are going to take control of this auction, they're going to get priced back above 761. That's what the buyers want to do. Remember, the buyers want, if there was an imaginary game and the game was called green candle, red candle, right? Green candle, red candle, that's the imaginary game that's happening. The buyers want a green candle and the sellers want a red candle. Like, that's what the whole game is. And so right now, the sellers got a red candle. So they're winning right now. They're taking the lead of this auction. Imagine like an auction for 30 minutes would be the same of like a soccer game, right? Or a football game. There's quarters in a game, right? There's innings in a baseball game. There's halftime, right? So in sports. So right now, who's winning this current game are the sellers, right? The sellers have dominated keeping price under the opening price, creating lower lows, creating lower highs. But there's a challenge right here by the buyers. The buyers just got a higher high. They just broke the structure here. So it doesn't mean that the buyers are going to win. It doesn't mean that. But it means that it's almost like they just got a turnover if you're watching sports, right? As an example, or they just stole the ball. They stole the ball from the sellers. So now let's see if the buyers have enough juice to take control of this auction, or if the sellers are still here. Now, this is where we can start using forward-looking information, such as liquidity. Right? So what's liquidity? Liquidity would be resting orders in the DOM. So we have 104 contracts sitting up top. So there's a seller waiting right here to get filled. We had a seller just execute right here. Okay. So now it looks like the buyers are beginning to fail here, exhaust. So right now, like, we can pretty much see that we've been consolidating. Where's our point of control? We're right at our point of control, right? So Bookmap has point of control. So this is why we're seeing prices slow churn right here in this area. So right now, there's not much going on. These buyers got 10 minutes to try to reclaim that 761 open and win this 30-minute candle. So we can see here an offer just got placed for 200 contracts and a buyer just bought it. Are they going to be able to like squeeze through this area here? So you got a big buyer and nothing happened. Someone bought that 200 contracts and nothing happened. It'll be a short, so I'm going to scalp it. So for context, we got, there you go, target already hit. The auction was the key. The fact that we were underneath the 930 open was already the key, that the sellers were in control, right? That was the key. The buyers challenged right here, and then they failed to execute. We got a big buyer that just came in, 238 contracts, executed, and then there was no follow through. That's volume profile in action, right? That's volume profile in action, ladies and gentlemen. It's the same information, but it's real time. Like, I can see the pinpoint exact spot where the interaction between buyers and sellers executed, and then the actual result, right? The result. So the buyers challenged here, boom. But we knew we were bearish. The sellers were in control of the auction. Buyers got long up here. They started buying 59 contracts. Sellers immediately hit the bid. Then we had an offer, right? A resting order for 200 contracts got thrown right where price was, and the buyers immediately took it for 239 contracts. They actually did buy. So we had aggressive buyers come in. So on a volume profile, you would have seen like a node pop up in this area here, right? Probably a few of them, since we have some large size clustered up in that area. That's technically a POC on Bookmap. And then as soon as we got the reaction, right? As soon as we got that reaction right there, boom, unable to hit to reclaim. So then our tool here, this little red line, is telling us, hey, buyers were unable to get the flip. They couldn't flip bullish, and then we just took a short for a scalp.